What's up, traders? Welcome back to my YouTube channel. And this is phase 3, where we all go through the same things: struggle, alignment, and then mastery, fully conquering the best version of yourself. So, without further ado, let's get right to it. I personally feel like the weekly template is something that a beginner in Stacy Berg strategy should automatically start off with because it's simple. It lays out the template for you, and all you have to do is follow it. So let's get right into the basics. Now, timing. If you're an Asian trader, then you're trading between the hours of 8 p.m. to 11 p.m. New York Eastern Time. If you're a London trader, then you're trading in between the hours of 2 a.m. to 5 a.m. New York Eastern Time. Now, in London session, the equity hour for that session is at 3 a.m. That's basically when volume really starts to kick in. So I would be looking to get in around that time. But I am a New York trader. And if you're trading New York session, you get in from 8 a.m. to 11 a.m. New York Eastern Time. And the equity hour for the New York session is 9:30 a.m. So if you're trading US 30, NAS, SPX, or any other type of indice, then 9:30 is your best bet to wait for that volume to kick in. Let that manipulation happen, and then go ahead and search for your trades. So the next thing we want to talk about is levels. Levels. All right. So the levels that I trade off of are the high of day levels, the high of week levels, and the high of month levels. All right. I also trade from the low of the day, the low of the week, and the low of the month. And I also trade closing prices. So if you're looking at a daily candle, if this is a daily candle, these are basically the levels that I trade off of. I trade off of the low, the high, and if this is a bullish candle, the close. That's basically the levels that you're trading off of while using Stacy Berg strategy. So my entry criteria is on the day, I want to see a 15-minute coil on my chart. That is really important to me because the coil was something that I was having an issue with in the beginning. But after doing a lot of studying, I realized that it will pop out. You just can't miss it. So on the 15-minute, you want to see a coil. If you have a coil, then you're going here. All right. So after the 15-minute coil, you're looking on your 5-minute chart, and you want to see candles closing well below the EMA. So if this is your EMA and you're taking a pump and dump setup, you don't want to take a trade when the candle is just crossing. You want to take your trades well below the EMA. All right. You want those candles to be closing well below the EMA. All right. So that's the entry criteria. Now, after you got those candles closing well above or below that EMA, you just enter, no hesitation. Guys, this is probably one of the hardest parts for traders in general. You're psyching yourself out of the trade before you even enter the trade. And you're not realizing that you need to take these trades because you need that data to reveal itself so that you can start having an identity. But if you're not taking trades, then you're not giving yourself that experience in the market, because we're all going to lose trades, guys. We're all going to lose trades. But if you're scared to lose trades, then you don't deserve to win. I truly believe that. So let's get right to the weekly template. Now, it starts off on Monday. Monday is the opening range. All right. Monday decides the range of the week. Now, when Tuesday comes along, that is the range expansion day. All right. So between Monday and Tuesday, That's going to be your initial balance. After Monday and Tuesday happen, either the high or the low is going to be locked in for the rest of the week. All right. So day 3, which is Wednesday, is the day that we take our trades. I don't take my trades on Monday. I sometimes take my trades on Tuesdays on the range expansion days, but that's just me personally. But there will always be a trade on Wednesdays and Fridays because that's day 3. So on day 3, we're looking for either a trend or a reversal. All right. Now, Wednesday also resets the week, and it resets it back to day 1. All right. So now Wednesday is day 1. We automatically know that it was a trend or reversal day from the cycle before. So Wednesday, day 1. All right. Thursday, range expansion day. That's day 2. All right. That expands the range. And then Friday is day 3. That's our trade day. That's when we take our trades. And the day 3s will always be either a trend or a reversal. All right. Now, Friday is the close of the market. Now, instruments I'm trading. I like to trade US 30, NAS 100, gold, GU, EU, GJ. Those are the only ones that I really trade, but I want to be honest with you guys because I got a question in my comments recently, and just want to shout out everybody that supported me. I really appreciate all the love and support from you guys. Like, I didn't expect that video to blow up as much as it did, and it felt really great. And I'm so excited to grow with you guys. But back to the subject. I had gotten a question, and they asked me how many uh, how many instruments should I have in my watch list? And I personally believe that every single instrument is at least going to give you one a week, at least one. I kid you guys not. I traded US 30 and only US 30 this whole week. This whole week. And it was a very successful week for me. So you just have to know what you want to see, what your setup is, what your signal is, and execute. Don't hesitate. Trust yourself. Build belief. That's the key. Build belief and execute. Now let's head to these charts. All right, traders. So now we're in the live market. And what I'm going to do is go over a trade that a trader was struggling with, so he can just get a better idea of what he's looking for. And I'm also just going to go through the whole week, right? So this is the week, the weekly template. And let's start on Monday. On Monday, we got a closing breakout to the upside, right? So the first thing I do when I get a closing breakout is I like to mark my breakout level. That's so important. Guys, when you get a closing breakout, mark your breakout level, all right? Because markets only do 3 things. They break out, they pull back, they trend, they break out, they pull back, they reverse, or they break out and they just range, right? So if we're following the weekly template, we're only taking trades Wednesdays and Fridays. So we're staying patient, guys. So Monday closes in breakout, right? And Tuesday, we're really seeing what price wants to do, right? So it looks like it gives us an peak formation, right? It gives us a peak formation during the Asian session, and it gives us a lower low in the inside of that pump. For London, pumps back up into that peak formation high from Asia, coils and dumps into the closing price, right? So we see that it dumps into the closing price, but that is also our breakout level, guys. The closing price is the breakout level from Monday. So it coils at the breakout level and starts pumping back up. Now, we're really interested now because it's pulled back to the breakout level and is now acting like it wants to trend. So now we're on Wednesday. And for the sake of this video, I'm going to just go as low as the 15-minute time frame just because I think I haven't used this in a while. So I may have to update my plan because it's not showing enough bars. But anyways, So we're just going to drop down to the 15 minutes so I can show you guys exactly what I'm looking for on the day, right? Let's see, should be over here. Here we are. All right. So on Wednesday, you can see that we are dumping Asian. Now let me put a vertical line on because we do not see our New York session opening. We come to the charts, we see it's dumped during Asian, right? It's worked that peak formation low. So when we're coming to the charts on Wednesday, right? We want to ask ourselves one question. Is it working the high or is it working the low? You come to the charts on Wednesday, it's dumping into the peak formation low. It's coiled, it's right at the previous day's low, and it's pumping back up, giving you higher highs in the inside, guys. That's so important because that's part of our setup. If you're not recognizing this, then I suggest you start printing out your charts and really studying them. And if you're back testing, I suggest my personal opinion, and I learned this from my mentor, shout out Sniper Trades. Back testing isn't going to help you guys. It's not going to help you. You have to print these charts out. Hindsight pays. Okay. So you see the dump during Asia. It's starting to give you higher highs, guys, in the inside of the EMA. That's our criteria. All right. We see the coil. It's coiling. It's giving us side by side candles. Okay. This whole thing right here is a coil. Dump, coil. What's next? Equity hour opens, right? Our session, 8 a.m. This is gold. So gold usually starts to move around 9 a.m., but sometimes it could start to move at 8. I usually like to look at 9. So say we're looking, New York session opens up and we're waiting until 9 o'clock happens, right? As you can see, right before New York opens up, what does it do? It gives you a higher high, right? It beats London's high. It dumps down to what? Closing price, a level. It dumps down into closing price in coils. At 9 a.m., it gives you a strong engulfing candle to the upside. Signal, entry. All right. So remember, I told you I want to see candles well above the 20 EMA. After it gives us our engulfment candle, I am waiting. Okay. I'm waiting. I'm seeing how it closes. The next couple candles, I can see that it's holding steadily above the 20 EMA. Honestly, from this point on, guys, you can enter whenever, even if you were to enter right here, right? After the retest, because it comes back and it retests that closing price level just to pump back up. You can wait for the retest. Say you missed that. You can get in here. And what is this level? This is the previous day's high. Get in at levels. You are well above the 20 EMA. You are safe. Believe it, guys. You have to trust yourself so that you can start to accumulate data, right? So I would have put a long position in here. My long position after the retest of closing price, I would have gotten in here, my stop loss below the wick, and I would have took it to the high or the close of the day. All right. And that's how you do these, guys. Day 1, day 2, day 3. All right. You just need to know what to look for. What's your setup? So let's move on. Let's go back to the hour chart and let's do a pump coil dump. We've done a dump coil pump. Let's do a pump coil dump. All right. So now we reset. It's Wednesday. We took our Wednesday trade, our day 3 trade. It is reset day. Now it goes to day 1, right? So we noticed that Wednesday has closed in breakout. What do? We mark our breakout level. Okay. Now it's Thursday and we're seeing how Thursday trades. So Thursday gives us a peak formation high in New York and then gives us a reversal trade back down and closes below the open. We call this day a first red day because we get this first red day at the high of the month. We also get it at the high of the week, right? So what do we want to see the next day? We want to see a pump, coil, dump, right? So as this day gives us a peak formation high, it trades down to our breakout level. That's why it's so important for you guys to mark your breakout levels, because what do markets do? They break out. Let me actually map this out for you guys so you guys can truly see this. It breaks out. It pulls back. You have a first red day at the high of the week. What do you want to see? Pump, coil, dump, breakout, pull back, fail, reverse. All right. That's what you're looking for. So let me explain this a little bit more intricately. All right. So you have the market that pulled back to your breakout level and is now pumping. It closes. All right. First red day. Friday opens up. You're on your 15-minute chart. You already know you want to see a pump, coil, dump. Let's go and see how that happened. All right. We are here. So this is Friday, and we can see that price is pumping. Now, if you're trading New York, you're not looking at New York right now. It's Asian session. So it's pumping during Asian, and then it starts giving lower lows in the inside, guys. In the inside. And this particular trade, this was a London trade. It gave us the trade in London, and it also gave us a trade in New York. This was absolutely a parabolic trade. So remember, guys, when you come to the charts, right, and you see a pump, you're on the front side. If you got a first red day, that was your signal day, and you come to the charts and it's pumping, you're on the front side of the market. Wait for the back side, okay? Wait for the lower lows in the inside, right? So say you're a London trader. All right, no problem. You got your pump, right? At the pump, it starts pulling back, but this high fails. All right, then you get a strong engulfment candle down inside the EMA. It pulls back to the EMA and gives you a nice dump down. It has broken structure and is now dumping, and you are now on the backside, right? So it broke a major low, it broke structure, right? Now it's pulling back. Okay. And at this point, remember, the equity hour for London is 3 a.m. Let's go. 3 is here, right? So say you're on the charts. You wait till 3 a.m. You see that price has broken structure. All right. It has took out stops from Asian session. So it's giving you a lower low, and a lower low is the recipe for a pump, coil. All right, coil, dump. You're now getting lower lows in the inside of the EMA. Guys, you can enter. You can enter here after the doji. Okay, if you're scared, no worries. Wait for the retest. Why? Because look what they do. Look what they do. They come back. They pull back to closing price, a level, and then they give you an engulfment candle down. Enter. Oh, you don't want to enter there? That's fine. You can enter at the previous day's low. You still catch pips. It starts pulling down, collapsing. Okay, that's fine. You missed the trade. You missed the trade in London session and you're a New York trader. That's fine. All right. Guys, it's as simple as this. When you come to the charts and you're a New York trader, right? And you're like, okay, the move already looked like it's happened, right? Don't worry about that. Don't worry about that. You see the pump, you see the coil, you see it dumping. It's below the EMA. All right. What do you need to see? Lower low. I can't show you guys on the 5 minute because it won't let me. Lower low, pump, coil, dump. This was a clean move. If you were looking on the 1 minute, clean. All right. The best move though was London session. You really don't want to be down here. All right. The real move was London. So I really hope this helped you guys. All right. And just to reiterate this specific trade, what do markets do? Markets only do three things. Remember what I said Wednesday, it broke out. All right. It pulled back, fail, reverse. That's all this is. That's all this is, guys. It's going to take a second for you to actually catch on to it. But once you see it, you cannot unsee it. Stop second guessing yourself. Okay. Stop overloading yourself with things that you can't like understand just yet. And because it's okay, you're not supposed to understand everything at one time. Take your time with this, guys. Stop back testing. Hindsight pays. Print your charts out. I want you, this is your homework. I want you to print out every single first red day, first green day, close and breakout, whatever your signal is. Print those charts out and really study them. Study them and study the winning trades. Don't study your losing trades. All right. If you want to stop losing, stop taking losing trades, guys. So that's your homework. Print out your charts, print out your signals, and study them. Study how they look, memorize it, because that is your cheat code for printing money for the rest of your life. All right. So this is Q, this is phase 3, and we're out.